Have you ever watched someone lose everything, even though they thought they were protected? It happens every single day. A family gets hit with a huge bill after a fire. A driver gets sued for more money than they've ever seen. A parent passes away, and the kids get nothing because the policy wasn't set up right. These moments don't just break bank accounts, they break lives. And the scary part is this. Most of these disasters come from simple insurance mistakes that people never knew they were making. Today, we're pulling back the curtain. I'm going to show you the 7 insurance mistakes that quietly destroy people financially and how you can avoid them before it's too late. If you care about protecting your money, your family, and your future, you're in the right place. Welcome to Wealth Pal, a place where future exceptionally successful and wealthy individuals gain an unfair advantage. If you haven't yet, hit that subscribe button and turn on notifications so as to never miss out on a future life-changing video. Without further ado, let's get started. Why this matters. Insurance is supposed to be the safety net that catches you when life drops something heavy on your shoulders. But here's the truth most people never hear. Insurance only works if you understand what you're buying. Too many families think they're covered, only to find out usually at the worst moment that the policy they trusted has holes big enough to fall through. A single mistake can drain savings, force people into debt, or leave loved ones unprotected. That's why this video matters. When you know the traps, you can avoid them. When you understand the rules, you can protect everything you've worked for. The 7 insurance mistakes. Let's now break down the 7 insurance mistakes that destroy people financially. Number 1. Choosing the cheapest policy. Let's start with the mistake almost everyone makes at least once. Picking the cheapest insurance policy because it saves money. It feels smart in the moment. You see 2 plans. One is $40 a month, the other is $19, and your brain says, easy choice. But here's the truth most people don't learn until it's too late. Cheap insurance is often cheap for a reason. It may look like a good deal, but it usually comes with tiny coverage limits, big deductibles, and long lists of things it won't pay for. Imagine buying a lock for your front door that only works on Tuesdays. That's what cheap insurance is like. It gives you a false sense of safety. When something bad happens, a car crash, a house fire, a medical emergency, you don't want a bargain policy. You want a strong one. You want a policy that actually pays. The fix is simple. Don't compare prices first. Compare coverage. Look at what the policy protects, how much it pays, and what it excludes. A few extra dollars a month can save you thousands later. Cheap insurance is only cheap until you need it. Number 2. Not understanding exclusions. This mistake is sneaky because it hides in the fine print. Most people think insurance covers everything. They think, if something bad happens, I'm protected. But every insurance policy has exclusions, things it will not pay for, no matter how much you beg or argue. And these exclusions are often the exact things people assume are covered. For example, many home insurance policies don't cover floods. Many car insurance policies don't cover business use. Many health insurance plans don't cover certain treatments. And many life insurance policies have rules about risky activities. Imagine someone whose house floods after a big storm. They call their insurance company, expecting help. But the company says, sorry, flood damage isn't covered. That one sentence can destroy a family's finances. The fix is simple but powerful. Read the exclusions first. Not last, not someday. First, if you know what isn't covered, you can decide if you need extra protection. You can fill the gaps before they become disasters. Number 3, underinsuring their home or assets. This mistake hits homeowners hard. Many people insure their home based on the market value, the price they could sell it for. But insurance doesn't care about market value. Insurance cares about rebuild value. And rebuild value is often much higher. If your home burns down, the insurance company isn't buying you a new home on the market. They're paying to rebuild your old one. And rebuilding can cost a lot more than people expect. When someone underinsures their home, they think they're saving money. But when disaster strikes, they learn the painful truth. The insurance company only pays up to the limit you chose. If rebuilding costs more, you pay the rest. and the rest can be tens of thousands of dollars. The fix is to choose replacement cost coverage, not actual cash value. Replacement cost pays for what it takes to rebuild today, not what your home was worth years ago. It's one of the smartest choices you can make. Number 4, not updating policies after major life changes. Life changes fast. You get married, you have a baby, you buy a home, you start a business, you move to a new city. But while life changes, most people forget to update their insurance. They keep the same old policy they bought years ago, even though their life looks nothing like it did back then. This creates huge problems. For example, someone might get married but forget to update their life insurance beneficiary. If something happens to them, the money might go to the wrong person. Or someone might start a small business from home but never update their home insurance. If something goes wrong, the insurance company may refuse to pay because the home was being used for business. The fix is simple. Review your policies once a year and update them after big life events. Insurance should grow with you. It should match your life today, not your life 5 years ago. Number 5, relying only on employer insurance. Employer insurance feels safe. It feels easy. You sign a few papers and boom, you're covered. But here's the problem. Employer insurance is not yours. You don't own it. Your employer does. And if you lose your job, change jobs, or your employer changes their plan, your coverage can disappear overnight. Many people don't realize this until they're standing in a hospital, try to use insurance that no longer exists. Employer life insurance is another trap. It often gives only a small amount of coverage, maybe 1 or 2 years of your salary. That's not enough to protect a family. The fix is to have personal insurance you own and control. Employer insurance is a bonus, not a foundation. Build your own foundation. Number 6, not having liability or umbrella coverage. This mistake is one of the most dangerous because it deals with lawsuits. In today's world, people sue for everything. A slip on your sidewalk, a car accident, a dog bite, a kid getting hurt at your house. And lawsuits can cost far more than your regular insurance limits. If your car insurance covers $50,000, but you get sued for $300,000, guess who pays the extra $250,000? You do. That kind of bill can wipe out savings, retirement accounts, even your home. Umbrella insurance is the secret weapon most people don't know about. It adds extra protection on top of your other policies. And the best part? It's cheap. For a small amount each month, you can protect yourself from huge financial danger. It's one of the smartest insurance moves anyone can make. Number 7, not reading the fine print on claims. The last mistake is the one that hurts the most because it happens at the worst time, when you're already stressed, scared, or dealing with a crisis. Many people don't know the rules for filing claims. They don't know the deadlines. They don't know what documents they need. They don't know what steps to take right after an accident or disaster. And because they don't know, they make small mistakes that lead to big claim denials. For example, some policies require you to report damage within a certain number of days. Some require photos. Some require police reports. Some require you to protect the damaged property from getting worse. If you miss even one step, the insurance company can say, "Sorry, we can't pay this claim." The fix is to learn the claim rules before you need them. Keep a simple checklist. Know who to call. Know what to document. A little preparation can save you from a lot of pain. So let's bring everything together. The biggest insurance disasters don't come from bad luck. They come from small mistakes people never knew they were making. Choosing the cheapest policy, ignoring exclusions, underinsuring their home, forgetting to update coverage after life changes, relying only on employer plans, skipping liability and umbrella protection, and not knowing the rules for filing claims. Each mistake can open the door to huge bills, denied payouts, and years of stress. But now you know how to avoid them. Now you can protect your money and your family with confidence. If you found this helpful, hit like, subscribe, turn on notifications, and share it with someone who needs this information. And tell me in the comments which mistake surprised you the most. Your future self will thank you for learning this today. Thanks for watching, and see you in the next video.